if we're going to get a continued increase in global tension, gold's going to go up. And if the tension stops and everybody's friends again, then it's going to go down. So I don't think that global tension is going to fall. I mean, you can see the global tension part that the Middle East contributes to. That doesn't look like it's going to go down. We'll see about Ukraine, Russia in a few days' time. But, it will be wonderful if it does come down. And frankly, it will be wonderful if global tension doesn't go up, because, I mean, who wants to see all this death and destruction? But you can only, invest in what you expect to happen, and you are looking after your own self-interest, which is, you and yours comes first, right? But I think that I can easily see a 4,500 to 5,000 on gold.
As tensions between the United States and China continue to escalate, global financial advisor Clem Chambers predicts that gold prices could surge to $5,000 an ounce. Investors are rapidly repositioning as the U.S.-China standoff deepens with increasing tariffs, expanding technology restrictions, and fragmenting capital markets. As the risk of a complete decoupling grows, so does the demand for gold. They believe tensions are unlikely to ease, which should push gold higher. The speaker, Clem Chambers, exposes that the current surge in gold prices is not a speculative spike, but a repricing of risk. They believe the next phase could be even more dramatic if U.S.-China relations deteriorate further. Should Washington and Beijing continue to escalate rather than de-escalate, significant inflows into gold are expected to persist, as investors seek safety in a more fractured world. Central banks are aggressively buying gold to reduce reliance on the U.S. dollar amid rising geopolitical risks. Since Russia invaded Ukraine in 2022, global central bank purchases have exceeded 1,000 metric tons annually, double the previous decade's average. These cumulative purchases have driven spot gold prices up nearly 19% in 2025 alone. According to a recent survey by the World Gold Council, 95% of central bankers plan to increase their gold holdings over the next year. This continued appetite stems from geopolitical and economic uncertainty, financial instability, and a waning faith in traditional reserve assets, such as the dollar. Gold has surpassed the euro to become the second largest global reserve asset, now accounting for around 20% of official reserves, up from the euro's 16%. Meanwhile, central bank gold holdings have swelled to nearly 36,000 tons globally, approaching the historic 1965 high of 38,000 tons. As we present clips from the video, please like this video, subscribe to our channel, and turn on the notification bell to stay instantly notified every time we upload a new video. Thanks for the support and enjoy the video.
Now, if you think about countries, they have warehouses full of it. And you ask yourself, why would they do that? Why does Poland need a warehouse full of gold? I mean, it's not big into the electronics industry. They don't use gold for teeth anymore. It's not famous for the jewelry industry. Why does it have buildings full of gold? It's not going to put, get off the euro and have a gold zloty, is it? No, it's just not going to happen. But nonetheless, it's buying gold hand over fist right now. Well, that's because gold is for war. Gold is the currency of war, because in a war, people tend to not want to take your paper. And, paper, if you're on the winning side and you're a big country fighting a small one, not a problem. But if you're not, if it's a proper war when everything's hanging in the balance, when you say, please, could you send me, 10,000 tons of steel, please? They say, yeah, please, can you send me some gold? Gold is currency in war. So as the tension goes up, global tension, so countries have to buy more gold, and they're buying more gold because tension's been going up. Now, if tension goes down at some point, gold will go down. It's not any more complicated or any more simple than that. Gold is for war, and the tension in the global system right now has been going up and up and up. Now, the other thing to think about is that when you see the price today, it's not about today. It's not about yesterday. It's not about the day before. It's about where the market, as a group of predicting people, think things are going to be in about a year. There's like this horizon It's like driving down the motorway. You don't look at the end of your bonnet. You look as ahead on the road. And that ahead focus is about a year, because that's about as long on average as people who are in markets care about, a year. So as that horizon moves forward, so to 2 years or 3 years, so the price will change. Now, if we're going to get a continued increase in global tension, gold's going to go up. And if the tension stops and everybody's friends again, then it's going to go down. So I don't think that global tension is going to fall. I mean, you can see the global tension part that the Middle East contributes to. That doesn't look like it's going to go down. We'll see about Ukraine, Russia in a few days' time. But, it will be wonderful if it does come down. And frankly, it will be wonderful if global tension doesn't go up, because, I mean, who wants to see all this death and destruction? But you can only, invest in what you expect to happen. And you are looking after your own self-interest, which is, you and yours comes first, right? But I think that I can easily see a 4,500 to 5,000 on gold. But we will see. And, this Friday when Trump meets Putin, that will be a waypoint along that particular road. But outside of all that, we're in a different world now. And it's not just because of the White House. A lot of it's to do with AI. And AI really does change everything. And hopefully for the much better. And there'll be a lot of movement in things because of AI, commodities, companies, you name it. It will turn everything upside down, maybe in a good way. But the other thing to bear in mind is the way that I measure this is that Bitcoin is for war. Bitcoin, getting it wrong now. Gold is for war, Bitcoin is for flight. So when something bad is about to go down or could go down, or people are worried about it happening, Bitcoin runs. So, for example, you're seeing a bit of a run on Bitcoin now coming up to this meeting on Friday with Trump and with Putin. And you can imagine there's various people that would be pretty nervous about what's going to come out of that meeting. And that's going to turn up in the Bitcoin price. I think that the market would have already reacted to what is expected. Yeah, because when you think about a government, whether it's a Russian government or whether it's an American government, that's a very leaky vessel. So expectations have already leaked into the price. However, one thing about Trump is he is extremely unpredictable in many ways. So, I'm kind of expecting, I'm expecting a surprise, but I wouldn't trade that. I mean, he's too random. The outcome is too unpredictable. I mean, they're playing down the outcome. So I'm naturally imagining it's going to be big, but it's a fool's game to gamble on the markets.
Silver prices are reaching new highs, and investing in commodities like silver is one way to diversify your portfolio during a period of uncertainty for the stock market. Gold performed well throughout 2024, hitting new all-time highs. However, the price of silver has increased by over 33% so far in 2025, outpacing even gold's price gains during that period. Silver prices have reached their highest level in over a decade. A growing body of analysis suggests we may be entering a silver supercycle. With industrial demand booming, particularly from the solar energy sector, and continued supply deficits, some experts view silver as an explosive investment opportunity. The gold-to-silver ratio, currently elevated, reinforces silver's potential upside. According to the Silver Institute, between 2016 and 2024, total annual demand for silver increased from 993.3 million ounces to 1.16 billion ounces. Sentiment suggests that silver prices continue to rise this year. The silver supply deficit is widening, and the industrial trends underpinning silver demand are expected to accelerate further. Unlike gold, it's accessible to everyday buyers. You can purchase silver coins or bars without spending a fortune, making it feel like retail gold. Its price generally follows gold's movements and could potentially catch up from its current undervaluation. However, Clem favors holding a mix of metals, gold for security and silver, along with platinum and palladium, for portfolio balance. Let's recall the interview.
Well, silver is very interesting because it is the other precious metal. Now, I mean, I was looking into osmium. But silver, you can buy a bag of silver coins that America minted in the 1930s. You buy a sack of it, at whatever, $38 an ounce. You just sacks of this stuff. And, it has been money, and it was money for a very, very long time. And so it is, it's the second precious metal as a brand. Yeah. So, and it's also what I call, it's a retail precious metal, because it's always nice to have a pile, isn't it? It's like buying penny shares. Oh, I've got 1 million of this penny share. Well, it makes no difference, does it? But in the soul and the mind and the emotions and the viscera, it does. So, it's the retail gold. Yeah. You can buy a big old block of ingot of silver and it won't cost you your house. And so, you can buy £100 of gold or £20 of gold. 20 in weight, not in currency. It used to be a pound, That's why it's called a pound of silver. And a pennyweight, there's however many, 300 and blah, pennyweights in a pound. That's because pennies of silver, if you had that many of them, that was a pound of silver. Good old-fashioned way of thinking. So it's a retail gold. It's a retail precious metal. It will follow gold and has followed gold and will follow gold. And at some point, it will be the fast horse. Now, the interesting thing about it, and I still haven't really worked out in my head why this is, 25,000 tons of silver made every year. Okay? So that's like 8 times the amount of gold. Well, an eighth of the price of gold is about $450 an ounce, isn't it? It's, it's barely, not even 40 yet. So these ratios are kind of weird. And I'm not sure how to square the circle on that. I want to say, well, obviously it's going to go to, 8 to 1, isn't it? Ha, ha, ha. But it never was 8 to 1. It was 10 to 1. 100 or so years ago, it was 20 to 1. And now it's up, whatever it is now, 40s into, 80 to 1. But it is interesting because they are only making 25,000 tons of it a year, as opposed to 3,200 of gold. The only thing that story I like to tell was that when the Americans were running away or retreating from the Philippines during the Second World War, they took the gold and threw the silver in the bay. And I think that's one of the reasons why there's that disparity between silver and gold, is that gold has this extra use case of being very, very heavy, whereas silver, not so heavy, not so valuable. So the gold value by weight in itself is an added use case, because, you really want, as a currency for war, you really want density. You really want to be able to send large values of it in a small space. But anyway, silver will kind of track gold, and it will probably catch up a little bit from where it is now. But I'm a diversified portfolio risk kind of person. I like gold because gold is for war. I better have some silver.
Growing geopolitical concerns, such as the ongoing conflict between Russia and Ukraine and the U.S.-China dispute, are driving unprecedented central bank gold purchases and investor demand, which might push gold prices as high as $5,000 per ounce. In the meantime, silver's industrial-driven surge, historic supply shortages, and relative affordability suggest further growth, particularly when combined with gold, platinum, and palladium in a diversified precious metals portfolio. What long-term effects may a complete economic decoupling between the U.S. and China have on the price of precious metals? Could the gold-to-silver ratio someday return to historical norms as a result of the growth in silver's industrial demand? Please leave a remark in the section below with your ideas. Please remember to subscribe to receive updates, and if you find this helpful content, kindly give it a thumbs up. We are grateful that you joined us on this journey.